Hey everybody, welcome back to Swing Trading. My name is Mike Fairburn. It's great to have you all here today. Plenty of stuff to review, actually. We put on so many trades last week. We've got several to look at there. And so we'll look at those, but specifically for any new additions we want to be looking at today, we're going to be definitely taking a look at a bigger picture perspective, and then also kind of winding that down into maybe a swing trade time frame, kind of adding in maybe a time frame within that, maybe a weekly time frame to a daily, kind of building on that a little bit. And there's we'll talk about what benefits are in that when you're taking a larger term time frame with the trend on a shorter term basis. So I'll look forward to going through that with you. Hello to you, Mike. We've got David, Oda, Riceberg, Beth, David, Scott, Jay Richardson, as well as I'd Never Eat here. It's great to have you all on board. Folks, we are joined in the chat by Barb Armstrong. It is a privilege to have her on board. She's very knowledgeable on this topic, teaches a couple of great classes. When I say a couple, it's more than a couple, but I was going to say a couple of the same classes. There was a lot of demand for it. Trading a smaller account. She does it on a Monday and Friday. And great to have Barb here with us. Folks, you can follow us both on X, Barb Armstrong CS. You've got to have that CS at the end, Mike Fairborn CS. But looking forward to our discussion, and Barb's posted it right there. Fantastic. All right, everybody. Well, excited to go take a look at some things, and let's get the show started here. Jumping into some disclosures. So information here is for general information purposes only. Now, options do carry a high level of risk. They're not suitable for all investors. Spread trading must be done in a margin account. Multiple leg options strategies will involve multiple transaction costs. With that, short options can be assigned at any time, regardless of the expiration. Regardless of the Short options can be assigned at any time up to expiration, regardless of the in the money amount. An ITM option does have a higher risk of being assigned early. Paper money software application is for education purposes only, and investing does involve risk, including the loss of principal. There is no guarantee that an execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. With that, too, if we happen to look at a dividend-paying stock, I just want to throw this out there, too, that dividends are not guaranteed. Dividends can be cut at any time as well. All right. Well, with that, let's go back into just a couple of different reviews very, very quickly here. One of the key patterns that we'll look for on these moves to the upside could be a bull flag. The short term is generally the 3 to 10 days. I oftentimes will just say, 3 to 14 days, getting it almost basically a couple of weeks in there or so, maybe a little bit more, but 3 to 14 days of a rally. So much of what we do is just timing, setting up the trend. We like to get in the direction of the trend, but then also kind of the setup, a bounce along support, a pullback, a break above a moving average, a downward trend line. Folks, it's this move right there that we're so focused in on to the upside, where a lot of times with those price targets, well, what we do get are targets with price patterns, I should say. You get the targets in there, and there are some interesting ways to combine that, as you can see here with the flag pattern with the trend. And we have in the past looked at some bear flags as well. Just basically the same thing, just to the downside. A lot of times people will say to me, Mike, how do you know it's a bull flag or a bear flag? Which is a great question. It's a question I had years ago. And it means that you're learning, you're getting to the next level, which is fantastic. Really, it comes down to the trend. What's the direction of the trend? Lower lows and lower highs seem pretty clearly here. A lot of times they'll see this move and they'll say, well, this kind of looks like a flag pattern here. In other words, we've bounced up and now we're kind of flagging. Well, the problem is what's the direction of the trend? That is a new low. That is a lower high. That is a potentially lower high. If this was reversed and we were going higher, and this right here, we were looking at this range, after we're already making some progress to the upside, maybe the stock's responding to some anticipated news events or better earnings or current earnings. We see there are a fair number of companies out there that have beat earnings, 3 quarters in a row pretty handily. And some of them are just barely starting to trend to the upside as if prices are just catching on to this earnings growth. But that's what we're normally looking for there, okay? So we'll see a lot of those. Just want to throw that out to you really quickly. I just go through that because I think it's a good review, but people that haven't seen it before, just visiting for the first time, it is just something to keep in mind. Okay, price patterns can be helpful. Now, over here, looking at the market here, we've had that really strong bounce. I'm just going to do a fast review here. There's the break above the 61.8 and long-term resistance that we had there real close to 5,700. We've kept a lot of our gains here. Now, what might happen, what a lot of traders do believe could happen or is more likely to happen is once you're above that 61.8 Fibonacci level, there is just a greater tendency, they believe, or there's more of a likelihood for prices to continue on up, kind of like the long-term trend that you see here. It's very long. That's a 10-year weekly trend. You can see the extent of that. That's even longer, but that's a 15-year monthly. But you can see the move there to the upside. And so having said that, there might be more of a likelihood now to maybe rest upon, if it does pull back, that is, to rest upon prior highs right there. Because a lot of times, when the markets are trending higher, they do these. They'll come up, they'll pull back, or just like we saw over here. How many times do we see a pullback here? Flag pattern, flag, 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 bigger flag, but every one of those followed through to higher highs. Could we rest kind of down through here somewhere if it does pull back? That's the big question. So let's get into some of our picks from last week. We did quite a few of them. I'll start off with MSFT. This was actually done, remember, we were looking at last week's discussion was specifically on the gap trade. And I know many of you hadn't seen a lot of ways to trade a gap. A measurement gap is an approach to trade. We talked about that specifically and within last week's discussion, but this is one that we'd looked at here, and we need to kind of assess what we might consider doing at this point in time. You can see over here, we're getting so close right now along that big round number at 460, that is right there, 460 up top. But at that 460 level right there, that's kind of where we placed our target. And this was that measurement gap from the bottom to this top. And then we measure from the top of the gap to the rally up. This was the actual high, and then we saw a couple of additional points. And what I was going to state over here is that we do actually have some resistance right through there too. At that resistance level, we've actually been pausing a little bit. We were going up fairly nicely, but the last 4 days or so, we've been in a sideways range. Yesterday was a good day. We've seen some strength. RSI, money flow, it got us up. But you can see that price range to the top of the gap, to the bottom of the gap is just about there. So now this poses an interesting question here for us. Do we, decide to take the money at this point in time, make off with that paper money or not? It's right at that level. Here is a consideration, because I do want to put out a poll on this one as we look at it. But as you can see over up top here, we're getting a candlestick pattern right here. Anybody know that candlestick right now? I don't know if we'll get it towards the end. We got about 50 minutes left in the trading day. But if we get a candle, it kind of throws another wrinkle into this. In other words, if you're getting a candle indication, or what we've done in the past too, if we really get a pause, like right below the price support, is it really worth the dip all the way back down? Or at least to the 10 period exponential moving average to get out at an exit? It may not be. In fact, when you're that close, do you really want to give up? Because it can still gap down. Of course, that's always an option. Or do you try to get out? Right now, we put on a couple hundred shares, and it's up just under. I did 200 shares. It's kind of an expensive stock, but I wanted to put 2 contracts on to compare it as well. So we did a short put vertical as well on this. But normally we would have done maybe 100, so maybe it'd be up about 2,500 or 2,400 right now at those levels. But that's where we're at, that close to our target. And also remember, this too, again, we're hitting that longer term resistance level. So this is a key consideration that we'd want to look at as we go through. So let me just do this. I'm going to go ahead and let's just quickly set up a poll on this. I'm going to get you guys' perspective, but actually before I put that through, let's do this too. Before we do that, because I want to include this in the poll, because we did want to see how a short put vertical would compare and contrast with price action. I want to consider, upside gains. Obviously, we're going to be doing better with a directional move on a stock after the price has gone up, but there's also that risk side as well. So remember, we did a couple of, okay, I've got 60 strikes over here. We just did a 5 wide over here, and this was out a little over 30, was about 38 days, I think, when we did it. It's 31 right now. Generally, we will go out if we're expecting a 5 to 10 day move, or a 3 to 14 day move, or whatever, right in that range. We'll generally go out an additional time frame here. We'll give it another 2 weeks, and so we generally will go to about a 30-day time frame. Is why we chose the June. It was a little bit more than that at the time, but looking at it right now, that was the 430. So we sold the 430 and bought the 425 put. We sold the 430. So as prices had broken up and started to move up here, we sold this 430 right in the middle of this range, the 430. We bought the 425. The 425 just below it. Okay, so we really tried to ensure that in case there was a substantial move to the downside, we have that long put in there to protect us. And that was kind of a more, let's pull it up right now and see how we're doing on that. The first put, we sold that at, let's see, 765. It's now 286. So about 950 or so we're up on that, on the 2 contracts that we wanted to do. The long trade, though, is down 818, which is exactly what we would expect to get, right? Because we're trying to get the difference between the two at expiration, what we sold at the higher strike, what we bought at the lower strike on this put side here. And so you can see that the overall gain, if we're looking at it there, is not nearly as much. It's a little over maybe $125 or so. I'm just kind of estimating it, looking at it, $130, somewhere in that range that we'd made, okay, on this. How much, by the way, how much do we have left? We've got 280, 650. Let's see, I'm just going to pull up a little calculator here. We can go through this right now. First of all, some traders might try to get 80% of that short leg or potentially the total contract, but 80% of this was, let's see, it was 7.65. I'm going to do it times 0.2. So if it goes to $1.53, where are we at right now? So 282, that could be a potential point where somebody could consider closing it. How much have we dropped, though? Let's see, we've dropped already, just using the short strike as an example. So 285, 265, 285. What's the difference between those two? 765 minus 285, so 480. We'll divide that by the original 765. So it's down really close to 2/3 in terms of what it's given back, because we did sell it in the 7 range, and now it's in the 2 range, 280 range. Okay, so those are some considerations as well, right, as we look at this. But what I wanted to do was put in that poll on this. We'll start on our next one too as we get going to this, but just to get this going here. Okay, so let me just do this. So I'm going to have 3 different options. Do we take, make off with the money, the paper money on the stock, the short put vertical, and the final one would be both. And I'm just going to start that poll right now, and it should put it at the top of the screen there for us, and there we have it. So if you can vote on that, because I want you guys to kind of think through what we'd be looking for on each of these. While we're waiting for that to kind of unfold, let's just take a look at some of the other stocks that we had placed some paper trades on. There was Netflix, and Netflix over here, that one was, no, it was also options. That's right. We did a little bit wider though. We didn't do a 5 wide. We did a 10 wide on Netflix over here. As you can see over here, that one, we sold it at 24. Gosh, that was one contract. Wow. I remember this is an expensive one. We sold this one a little bit lower, strike wise. It's 11 now. So you can see it's been cut more than in half. It's up 1290, almost 1300, but we have to offset that against our 1122. So you can see we've done okay, but this one gave us a little bit better, a little bit more of a range, but you can see where we're at there. And looking at Netflix, so we're not quite halfway. Well, we're a little bit more than halfway in terms of the profitability on this one. Right now, as it stands, right, it's unrealized profit, of course, on that short put. But what was that delta that we'd sold? I can't remember the exact delta, but it was in the the 20 to 40 range, and then probably close to 30, in the 30 range specifically. And again, a delta, the measurement on a delta, or how it's measured, is for every $1 increase in the underlying stock, this range over here will move basically on the based on the delta itself. So if we went up $1, this would drop about 18 cents just by that dollar move. So they're just going to come over here and take a quick peek at it. Over here, you can see, well, it did rally higher. We were looking at this little flag bounce right over here. This was our run up test. We tested it twice. There's first test, there's second test, right at 1100, and we rallied on up. Now, I would say this is interesting too, because the trend is clearly up. There could be support here, and we might bounce and run. I'm going to go ahead and just stick with that one. But back to our other trade now. So what we had initially, okay, I've got a both. Let's get the numbers on there. Appreciate you, those of you voting. We'll go ahead and adjust our AMD trade. There you go. There's both. There's the stock, short put vertical, and there you have it. Okay, so there are the tallies. So let's go ahead and sell off both of those for that Microsoft. So again, when you're getting that candlestick pattern up here near your target anyways, and also key point, candlestick pattern, Harami pattern, that's when the body of this candle, right? The body of the big candle fits in, the little body fits inside the big body, which is the prior day. If we were to look at this on an intraday basis, this is what you're seeing. You're seeing a breakdown where it opens lower, and it might create substantial resistance there, and it might be harder to go up on a daily chart. That's ultimately what's going on behind the scenes. And so, and remember, all that's happening too, not just at our target, but also at prior resistance down here too. Okay. Anyways, just a quick review. Let's go ahead and just sell that right now. We can go on here. I'm going to take this off, and we can go right click right off our charts, which I love to do. We'll just go sell. It should just pull up our, no. Okay, forget it. I can adjust it. We had we had 200 shares, so I can adjust it. That's fine. We'll just go down here, adjust it to 200, and confirm and send. And there we go. We just sold it. Okay. Anyways, we got it. We got rid of it, and there you have it. It's down today, so we had a loss on it today of 500 because it is off the highs from yesterday. Okay, now into the trade tab over here. Let's right click, create closing order. Let's see. Yeah. Create the entire closing order here. Normally I'll get a couple of these to choose from, but I'm just getting the one in there. That's okay. You know what? We'll just do it real quick here. I'm just going to send these through. We'll buy back the short first, and then we'll close this one too. Okay, Microsoft gone. It was within that time frame too that we were looking at. Click. There's the trade tab. Like I said, this move initially was within that 3 to 14 days. A lot of times that's what we'll get on the measurement gap to the upside as well. All right, we did Netflix. Let's take a look at EA. Okay, so EA was also a range over here. This is what we did on EA. We chose these two contracts over here, up 117 and 74. How are we doing on the chart? We're quite a ways down. It's actually a delta of 22 right now, so a little bit of the ways down, of course. 15-cent spread, 20-cent spread. That's how that's going. We did get past earnings, but the trend has been up. I'll stick to this one for now. We'll just kind of let it go, but that is one we're looking at. I know we were looking at the money flow being really quite strong down here as well. All right, now, trying to get through. We had so many of them. CSX. Okay, so CSX, we did 200 shares, CSX Corp. CSX would be the railroad. company. Let me just double check that. I'm pretty sure it is. Yeah. Freight transportation, rail-based transportation. And you can see over here, this was our second measurement gap that we looked at. We measured it off the bottom. So the bottom of the gap, as you can see right there, same range to the top of the gap. And I have that highlighted right here. Now, the one thing about this stock is notice over here with the volume, with the gap, it's been really actually good. We had solid volume coming up here, but on this pullback, which has been incredibly small, look at this pullback, folks. The volume is very, very light. Now, what happens? What are we seeing when the volume is light on a pullback? Less sellers generally is the way it's often interpreted by swing traders. Just less sellers coming out there to sell. In other words, you had more buyers coming in here, less sellers exiting here. So people are they're holding their positions. And also when they do that, it looks sort of like a flag pattern, does it not? You can see the flag right there. We don't know if it'll do this, but it has shown some strength off the bottom. One thing we could do too on this in terms of an exit potential, I want to go ahead and move that up right now because we have made a substantial amount of progress up to our target level. As you can see, better than halfway. We're consolidating. So one thing that traders, investors can do is they might go over here and just throw on a exponential moving average that we've talked about previously. We've looked at the 9, we looked at the 10. They're very close. I'll just throw the 10 in here because I know we've talked about it a lot, but let's pull this guy up and just see where it comes in at for a potential exit. And I'll show you where we're at right there. Okay, so you can see it's trailing up pretty quick. It started to flatten out a little bit, but that could be an exit point if it starts to go south here. But hey, it's still not to that point, and it is showing a flag pattern. If I back out a little bit, you can see that there is quite a bit of resistance right through here too. So at the same time it's hitting its target, it might also be hitting resistance. And by the way, I have to say there is resistance at that level and this level and where we're at. So that's kind of an interesting one as well. It does look, it has a lot of the makings of a flag, another flag being built inside of this measurement gap move with the lighter volume coming down. So it kind of checks out. In other words, right now for a continuation of a run, but there could always be an exit. I'm going to go ahead and just take this stop and pull it up just below that level right there, just to kind of lock in some additional gains right there, or cut our losses, whatever the case might be. Okay, and that can be adjusted up higher too. Some traders might even do this too. They might go to like a really short-term time frame, like a 10. There's your 30-minute chart. They might say, "Well, Mike, it's holding up here. The one thing we don't want to see it do is break below the support it's been sort of developing horizontal support, historical horizontal support on a 30-minute chart. We don't want to see that break below this level. Otherwise, it might just test this anyway. So why not just pull the stop up to that point too? See, that's one thing we can do. You know what? Let's do that. Just as an example. I'm just saying there's more than one way to do this. And so I'm just throwing out some ideas there, but I did put it right below that level. So we've potentially, the stop, like we've mentioned, it's not a guarantee to get out of that level, but potentially if it were to slowly trade down there, it's a liquid market, maybe we can get out better than we would down below. And that's the whole idea there. All right. Let's see. Hey, Wiley says, sell a call. That's true because we have the stock in there. Yeah, it's somebody that wants to own this. That could be an idea for sure. You could do something like that. You could sell a call. When you sell a call, you can also, that can be an interesting way to exit a position, to sell a call, to get a premium if it gets above a strike price, generally by expiration. That would be an interesting way to do it. Oh, let's see. So let's pull that back. So there was a question on Microsoft here. Priya says, let's see, a short call vertical. There could be that too. Yeah, so this is an interesting point too, because we were looking at Microsoft as a bullish type trade. And it has this big gap in here. I think it beat earnings expectations, yeah, pretty well, by about 26 cents or so. And so that could be a consideration, particularly at long levels of resistance. Let's go ahead and take a look at the weekly chart. Okay, so it even shows on a weekly basis too. That could be a consideration here. One thing that you might want to consider too, though, is what is the direction of the trend? The trend is up right now, but on the other side, I mean, you are using a short call vertical possibly, so you're giving yourself that flexibility. We're just flipping the short put vertical in the other direction, and we're saying, okay, sell a call, buy a call, sell and buy. And we're saying if we stay below this level, yeah, that could be, I mean, absolutely. And that might tie into, something that you're looking at with Microsoft specifically. You just don't think it's got the valuations or whatever the case might be, but it's also a way to control the risk, right? Just like on this Microsoft trade, when we looked at it, we got the stock, and the stock did really quite well. I mean, it blew away the short put vertical, right? But on the risk side, if we were to dip down lower, we're held between that range, right? On the short put where we bought the put, same holds true on the short call. We're controlling that risk, obviously. Yeah. I mean, the naked call would be unlimited risk. That's a trade we don't do at all. But I'm just saying that's the buying of the call could be helpful there. So yeah, I mean, it's something to look at. A lot of times I just was going to tell you, Priya, that I've normally done that when it's with the direction of the trend, or at least I see something like this. I see a struggle up here, and then I start to just maybe even on a short-term basis, lower lows, lower highs, and then maybe look for the short call vert, perhaps. Something like that. Okay, it says, okay, how do you get the limit and stop to show on the chart? And you said to adjust them. So when you put that trade in, so it actually just occurs when you put the trade in itself. So if I were to go in, actually, we're going to put a trade in here in just a second. In fact, let me hit the one that we did have a loss on, that we lost on APP App11. App11 just went sideways, but it's still into a flag. Let me get through this, and I'm going to show you exactly how that works, how we get these on the chart, because they're going to automatically populate as soon as we put in like the OCO bracket order. And once they show up, you can just drag, left click, hold the mouse button down, the left mouse button, drag and drop. That's it. I'll pull it up here just so it pops back. But that's all that takes place there. We'll show you that in just a second. This is App11, though. You can see App11 with its, sorry, so we actually had 3 measurement gaps last week. It was a little bit of a gappy week, but you can see this gap move up, bottom of the gap, top of the gap. Here's your measurement, and that is exactly where our target is on the 200. I think we're down on this. We are down. We're down 112, 110 roughly, right in that range thus far, because since we put that trade on, what have we done? We've kind of just flagged over here. We're very, very close to a possible exit as well, using the 10-period exponential moving average. If we wanted to use that as a possible exit level on the stop there. But there is this room, and just that room alone could make a big difference, because that's a lot of, well, let's see, what do we have in terms of a price range? That to there is about 40, almost 40, yeah, about 45 points from where we're at right now to this level at 20 shares. And so there could still be the move in there, but you can see it's still kind of a flag. We had a little minor flag right there as well. So I'm going to leave this one, but that is one of the losers. And the other one that did go down, we already got stopped out of it, was NEM. Of course, it's already bouncing back up. But we looked at this potential flag pattern. It came back down, and it's showing actually even a stronger one right here. Okay, now, that was a lot of review, actually. That took some time. But what we're going to do, let's take a look at potential trades for this week. And, there is the possibility, we've kind of flirted with it a little bit on the chart, but there's a possibility of a rotation into some of the gold stocks, like gold in general, or like the gold and silver miners. Like here is AEM, and you can see over here, this has a long-term upward trend. It has had a series. If you go back, let's go to a 2-year chart. This has really been the top performer, one of the key top performers in the gold miners. Doesn't mean it has to going forward. It just has been, and that's why I'm trying to basically explain it with this trend. But you can see the extent of these flag patterns. There's just so many little pullbacks here that ended up rallying higher. And here we are again right now, just barely breaking off this base. I think right now too, if I'm not mistaken, we are just barely taking out the 10-period moving average. Let's pull that up right now and just see exponential. Yeah, so just today. And that can be a signal for a flag entry, just like we'd seen over here. Notice there's a tendency to maybe stick in. The prices might hold above that level once it begins to break. It breaks, there's your flag. Breaks, there's your flag. It breaks, there's your flag. See how it holds above that average? It'll do it again right there. It breaks right there. We are breaking today. We don't know if it'll close above there today. There's about 30 minutes left in the trading day, but it might. And if so, it might do one of these again. So we can look at this as a potential trade as well as we look at this. Now, the flag pattern itself, we could look at this extended move to the upside right here. Notice this flag, because that's how these are calculated. We would take and remove these. You can see we did this previously. I believe it worked in our favor, but this move to the upside right there. And we'll duplicate that, and we'll pull this over here and drop it right there. So that's the extent of this run, if in fact this is a longer term, because it would be a longer term flag at this point, folks. Here's the pullback, rally, possible flag over here. Okay, absolutely. So that's one that could be considered. I think, let me just do this real fast. I wanted to pull up an index here for you. I just want to make sure I've got the right one as I do this, though. Oh, let's see, sorry. Yeah, so this is actually a gold and silver index. I wanted to show you the extent XAU that you can see the Philadelphia Gold and Silver Index, just the extent of what this index has done. It's had a really, really powerful run. In fact, gold has been showing some strength. In fact, you could see this move right here. Notice we're resting on a prior high over here as well. A high here and a high here. And if we can start to get moving here, that could also be an influence on some of those miners as well. So let's pull that up again. I wanted to look at AEM as our first potential trade. I'm gonna go back to we'll do a 6-month chart. We can keep some of these lines in here just to kind of help us out. And let's put that OCO bracket order in. That comes up to about 130, 34.50-ish, right in that range. Okay. Notice over here, one last thing before we continue. The volume has been relatively light after the pullback. So here's a pretty big run up. Look at this. Down, 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 down. There's a big pullback, jump up, and it's been pretty mild, and we're just starting to get going here. That's the question. We can try this again and see how that does unfold and kind of keep maybe the stops a little bit tighter in case it fakes out. But that would be a pretty extensive move from where we're at right now. We did have a hold, I guess, a couple of days ago, close above the high to low day. That still represents about 20 plus points if it did make its target here. So we could look at the short put vertical. We could look at the trade. In fact, we could do both. Why don't we just do both on this one? I'm gonna go ahead and set it up right now. I'm gonna just right click. We'll go down to buy custom order with an OCO bracket. We'll keep this on the chart here so we can reference that. I'll just do a single contract, or 100 shares. We'll do a single contract on the option itself. But for the limit order, remember, the limit and the stop orders, I'm going to go ahead and click on Good Till Cancel. So those hang around after we potentially get filled today. On the upside, it was 134.50, 134.50. And on the downside, well, what we can do, we'll just shoot up here. We've talked about a couple of different ways to exit, and that one of those ways, we'll just minimize this for now. One of those ways would be to just look at prices trading below the prior low, or below this range or using an ATR. I'll throw the ATR on here, average true range, so we can see what that looks like. So it's about a 2 point if we did the ATR, which puts us about right here. It's very, very tight. It's a tight, tight range. Yeah, because we're up 4 points today. But remember, we might want to be comparing that to the potential reward, which was like, what did we say, about 20, over 20, maybe 22 points or something like that. So yeah, we could either, yeah, it just kind of depends what we want to do. I'm at least going to put this, I mean, half of an ATR would be 2, but normally a full ATR would be 4. That's going to put us back to this level. If we did like a 1.5 ATR, so we're looking at around, well, 6, right? So 6 points would put us down here just below that low. I'll put it down, yeah, about 107 range. So let's pull that back up. Okay. And, oh man, what's going on here? I gotta make sure this is working. These numbers are all weird. Okay. Let me do this instead. I'm going to go back over here. We'll just do the trade, 34 and then 107. Okay, so I'm going to go over here, right click, buy custom, OCO. Okay, that looks more like it. The Goodtail cancel order, GTC for these two. On the upside, our target was the, let's see. Yeah, 134. 134, 50. And then down below, we wanted to go 107 range, just approximately, right? Okay, so right in there. So just with 100 shares there across the board. So let's go ahead and take a look at that order so we can see what's going on. Just to confirm where we're at, always be looking, at buying power effect, that margin requirement, and others, as you can see in there. Let's go ahead and click on send, and there you go. Okay, so let's come over here and look at the possibility of a June option contract. I'm going to minimize these strikes down substantially. So that gives us, perfect. So that gives us our 20 to our 40 range, like right through here. So we'd be looking at really like the 104 to the 110 level. You can see that the 110 has a little over 1,500 contracts. The stock right now is trading, 3.3 million shares already, and that's given us somewhat, a 20-cent spread on these right here. This one right here is at a dime. We can kind of determine what we want to do in terms of the spread in here, but let's go ahead and go with something in the 30s. I might as well just choose this. So the 110 is right here. You can see at that level, but then we would be, trying to control the losses on it wherever we're going to buy that put at. So whatever our range is going to be here, we can do, let's look at a 2 wide and just see what that looks like initially, because we are getting single strike ranges in here. So selling the 110, buying the 108, 15-cent spread on that for 77-cent credit. What does this look like over here in terms of what we got? So you can see a 70-cent potential max credit here, max profit, I should say. And then that is the margin requirement, $123. So 123 relative to what we're getting here at 77. Just to make a quick comparison here, I want to just look at this. So if you're looking at kind of a return on, well, we could look at or compared to the max loss, 123. So return on this is actually not too bad. 77 compared to our max loss there. It's a 60, almost a 63% return right there if we were to get the fill. Is it's listed here based on paper money, but that's actually not bad at all for this particular trade, real close to a 63 at that 77 cents. It just dropped down to 72. So I'm going to do it again and we'll see what it shows us here. Yeah, so it jumped up a little bit. Let's just get this. Maybe that's a little bit more realistic, perhaps. Let's see, 72. for 128. So it's still a 56% return. I'm going to go ahead and send that through right now. It looks like we got a fill at 72. Okay, so I just did a single contract there. I just did a one-to-one comparison, but we got that one under our belt. Now, there are some others that are setting up over there in some interesting fields. This is L3. By the way, you can see how it did put those on the, I should say, our bracket orders on the screen, and we can adjust these as prices move. And all we simply did was put in the order. I'm going to pull it up here so it just pops back to where it was. You can see we just put it below the prior day's low right here. Okay. But hey, big potential if it does in fact rally up to that point. It has been a pretty good upward trend for this AEM. There's no doubt about it. Certainly one of the better performers here. Yeah. All right. Let's see. Oh, okay. Yeah. So here's one that just mentioned. Oh, so there's a little bit of a potential flag pattern right there as well. Thanks for that, Riceberg. Sure, you're looking at that. And by the way, it's sitting right on the 10-period exponential moving average and right at that level as well. That is interesting. We know that it has generally a longer-term upward trend. There's no doubt about it, right? The trend's in place, and there you're looking at it right here. Yeah, that is interesting. I mean, look at the flag, this portion of the flag coming down right there, just in terms of a paper trade here. It's bouncing right off that level. It's right at it too. One thing that could be done too is we're not quite like above a hold here, like a close above the high of the low day. We came very, very close to it. One thing you can do and not give up a lot, unless there's a gap up higher and you just miss it. Sometimes that can happen. But just say, hey, if you break above this level, I'll tell you what, I'll put a trade on for us if we get above that level this week. Okay, we'll put I should just say it's a flag pattern here, but I will put a stock trade on the bull flag. It's a mini bull flag, and so it's kind of interesting here because it would just be, you'd basically be looking at possibly this move up here and then this move up here. So not a huge run, but again, it's a high price stock. It could be bigger. So, all right, let's clear that off. And I'm going to do this for now. I'm going to right click right there. And if I get above that level, so I can see on the chart, I'm going to create an alert there. So if it goes at or above, I'm just going to say breakout question mark, and I will take a look at that. That's a very interesting one. Thank you. Here's these LHX, interesting paper. This one is broken out of its range. Where might the flag pattern be on something like this? Right here. There's the pole. Consolidation, a little bit longer term, but this same pole right there, you may in fact get right there. So it's a little bit longer. I mean, it's been running for a little bit, hasn't it? But sometimes what can occur here is that prices might come back down and rest on prior highs. And if it were to do that, do we have some prior highs here? Wow. Do we ever? Let me count them. 1, 2, 3, 4. 4 prior highs, very close to that level, not to mention that shorter term moving average as well. But this could be breaking out of a base. And there is another projection in here, price projection, that can be used. It's referred to as a measured move. Now, I'm not going to write all that. We'll be here all night. All day. Measured move. The measured move is this. Take the high range right there and the low range, which we actually came close to a couple of times. You take this, and that is going to be about 230. Excuse me, 30 points. My apologies. I'm looking at 230. About 230. You take this range here, and if you break above it, you take that exact same range right there, just eyeballing it. That does put us back up to prior highs. So that's a whole other way to do it. And the reason why I think we could even go that far is because of the fact that this, folks, has been working itself out for a while now. Now, it's not a guarantee it's going to go higher, but this whole range, that's been there since the first of the year. This whole year, we've been working out this range, and we just took it out. That is L3 Harris Technologies. So this could be an interesting one as well. You know what? I'm gonna go ahead and put this trade on. We're out of time now, but this could be one that we could take a look at. Oh yeah, absolutely. I never hear mentions of that, and I do like using those alerts. They come pretty quick. I've had alerts sit out there for over 2 years, and then when it hits, I'm talking a long term. You think this is a long term range, folks? I've looked at like yearly ranges that might last 2 years, and within 3 to 5 seconds, generally is how I've looked at it. I mean, that's when I've gotten my alerts. So it's a nice little clearly a cool feature. And by the way, you can set those up if you haven't done that already up in the setup up here, application settings, notifications, and boom, you can set it up there. All right, everybody. Well, that's it for today. It's been great being with you. Thanks so much, Barb, for your help. You guys had a lot of comments, and I apologize. I can't look at all the comments. I wish I could as we go through here, but you guys saw last week we had like 6 stocks, 6 paper money editions, and a couple of those were well, they were the gap trades. And you can find that gap trade if you wanted to, just in the session over here. Barb's got some great stuff as well. But if you go into the playlists, you can actually pull it up. You'd find it in here. And yeah, anyhow, I'll post this in. All right, everybody. Well, have a good rest of the day. And it was great being with you. Look forward to future discussions. See you next time.